Ladies and gentlemen, good day and welcome to JK Lakshmi Cement Limited's quarter and year ended 31st March 2024 conference call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Yeah, thank you, Michelle. Good evening, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the earnings call of JK Lakshmi Cement for the quarter and year ended 31st March 2024. I need to highlight that JK Lakshmi Cement is also the holding company of its listed entity, Udaipur Cement Works Limited, and therefore this call is also open for discussion about the performance of Udaipur Cement Works Limited. On the call, we have with us Mr. Arun Kumar Shukla, President and Director, and Mr. Sudhir Bidkar, CFO at JK Lakshmi Cement. I would like to mention on behalf of JK Lakshmi Cement and its management that certain statements that may be made or discussed on this conference call may be forward-looking statements related to future developments and which are based on current expectations. These statements are subject to a number of risks, uncertainties, and other important factors which may cause actual developments and results to differ materially from the statements made. JK Lakshmi Cement Limited and the management of the company assumes no obligation to publicly update or alter these forward-looking statements, whether as a result of new information or future events or otherwise. I will now hand over the floor to the management of JK Lakshmi Cement for their opening remarks, which will follow by interactive Q&A. Thank you, and over to you, sir.
Yeah. Vaibhav, good afternoon to all of you, and thanks for attending this call. I think you must have gone through our presentations, which we have already uploaded over the website. Right, but before that, I think I'll give you a brief glimpse of what has happened in the quarter 4 of last year and also for the whole year. So we have been through a very good journey at JK Lakshmi Cement and Udaipur Cement Works Limited with respect to the progress which we have made. As I said, around a year back or even more than that we are trying to bridge our gap with respect to our competitors in terms of EBITDA per ton. And that is what I think we have been trying to do for the last 18 months or so. In my earlier conversations and during meeting with you, I have told you that what all areas we are working on. And perhaps all those things are well directional, and we have started getting advantage out of that. So that resulted into, that effort has resulted into bridging our gap with respect to EBITDA per ton with respect to competitors. Quarter 4, if you see, I think yes, our volume is little bit on a lower side, primarily because of the fact that we have reduced our volume from our outsourced unit, and also our focus was really kind of improve our efficiency across the value chain, right? In terms of renewable energy, we have progressed very well. Right, quarter 4, we are at 47% at the group level, and individually at JKLC and Udaipur Cement Works Limited, we are at 39% and 46% level. So renewable energy also we have progressed very well. On AFR front, which is one of our prime focus area with respect to manufacturing cost, there also we have progressed very well. Last quarter we have closed our TSR at 7%, which was 4% last year, and quarter 4. If you look at quarter 4 alone, then our TSR was 11.27%, including JK Puram and Durg. On premium product front, also we have progressed very well. East, I think, where premium segment is on little lower side, but west and north, where sizable premium segment is there, our premium proportion is more than 25% in these two markets, right? On supply chain, we have progress on reducing our lead. Lead is at 372 kilometers at the end of quarter 4, and if you look at last year, I think our lead reduction is more than 25 kilometers, right? Along this supply chain, also we have done quite a bit on improving our direct percentage, then using technology to improve our customer experience, right? So this is on supply chain part of it. On project front, First phase of AFR we have already concluded, which I told you during our last conversation. Udaipur Cement Works Limited, we commissioned our grinding station of 2.5 million ton on 28th of October 28th of March 2024, right? And Durg Railway project, first phase we are going likely to conclude very soon. We have already started, loading clinker from that, site to our different locations for selling as well as, transferring clinker to our grinding stations. So this is on, project front. What else? I think this is what I think. I'll just, take you questions. If anything I missed out, I just wanted to give you a brief as to how we have progressed. You have seen our EBITDA per ton last quarter, and we are happy that, whatever actions we have taken, we have been on the right track. So for now, I take a pause and I wait for your questions. Our CFO, Mr. Vidkar, and I am here to answer your questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone phone. If you wish to withdraw yourself from the queue, you may press star and 2. Participants are requested to use only handsets while asking a question. You may please press star and then 1 to ask questions. The first question is from the line of Rajesh Kumar Ravi from HDFC Securities. Please go ahead.
Hi, sir. Good evening and congrats on good set of numbers, predominantly on the margins front. Third consecutive quarter of good performance. Hello, am I audible?
Yeah, very much.
Yeah, okay. Sure. Sir, could you discuss on first the expansion plans? How would this Udaipur expansion, not Udaipur, this Surat expansion, and then what are the plans on the east expansions, and also touch upon what are the thoughts on the northeast expansion, what sort of capex and expenditure you're looking for the northeast expansions in FY25, and what is the plan for next 2 years in terms of, because you're looking at 30 million ton by FY2030.
Thank you, Rajesh. As far as the Surat grinding unit is concerned, we are doubling the capacity from 1.5 million to 2.7. So that is on stream as per the original schedule. As regards the expansion in Durg, we are talking of a 2.3 million clinker and 4.6 cement capacity. There we are talking of 3 split location grinding unit and 1 grinding unit at the integrated plant in Durg. That will cost us close to about 2,500 crores. So we have, in the first phase, we'll go with the clinkerization plus grinding unit in Durg, that is the integrated plant, and in UP, Prayagraj.
Okay.
This will have the other split located grinding units in Jharkhand and Bihar.
Mm-hmm. So Udaipur, when are you looking at Surat expansion this year only, FY25 it will be operational?
Yeah, towards the end of
last quarter.
Yeah. And as far as the first phase of the Durg is concerned, that is FY26 towards the end, and second phase towards the end of FY27.
Okay.
But the cost, it is about 225 crores for the Surat grinding unit and 2,500 crores for the Durg expansion. The Northeast project, we are presently in the process of acquiring land, so it is still some time away before we can talk of the exact timeline for that project there.
Mm-hmm. And so this 330 crore is already paid for the acquisition?
No, we are not. That is being phased out. We have paid about 125 odd crores only.
So this 1,500 crore includes everything, or this is over and above this 330 crores?
This is 1,500 crores is for the project, so this 325 would be over and above that.
Okay, so around 1,800 odd crore. And by when is it fair to assume that this will get commissioned, if at all, by FY27 and or FY28, because it is a greenfield project?
That will take some time. I am not able to give a timeline because we are working on those external approvals like land acquisition, environmental clearance, and all that. So once those are in place, then 2 years thereafter we should target the start of the greenfield.
Okay. And coming back to the operations, could you give the this RMC revenue and non-cement revenue and EBITDA for the contribution in Q4?
The non-cement revenue were
154 crore.
In this quarter were 154. Yeah, 154 crores.
And RMC is how much in that?
RMC is 86 crore out of that. 21 crore is POP and 8 crore is AAC.
Okay, and EBITDA margin for this non-cement revenue would be around 4%? Or better than that? How much?
5%.
5%.
Okay. Sir, how are you looking at this Gujarat markets? Just wanted to ask because this is a very critical market for you, and in a geo mix also. You have been guiding that you are making good profitability in Gujarat market. So, any views given that Ambuja is ramping up its plant, in the Sanghi unit, and would be selling under ACC and Ambuja brand. So, what is your thought process? Do you see pricing erosion, and that could have a bearing on players like you? Because for you, Gujarat is a big market in terms of your total volumes.
And as I said before, I feel rationally, how market is behaving. And I repeat that rationally, market is not going to behave this way. Right?
I'm sorry to interrupt, sir. Your voice is breaking.
Sir,
your voice is breaking.
Audible? Now audible?
Yes, sir. Please, can you please repeat?
Yeah. So what I said is that best market is not going to behave irrationally, because as a rational person, I believe that market is going to behave rationally, and therefore it is not going to be illusion, or I would say with respect to the pricing trend, right? And that happens everywhere, not only for West, but everywhere. And that is what still I believe, and we are discussing this for the last maybe 2-3 quarters, but as it is, not much of a change. And the West is behaving the same way as, other markets are behaving. Take it North, take it East, or even other markets. Yeah, kind of, radical change in terms of, price dynamics.
Okay. And lastly, in FY20, from Q4 onwards, what was the fuel cost in Q4?
I'm sorry to interrupt. Mr. Ravi, could you please hold the line? I would request the management to just disconnect and connect back. Sir, I'll disconnect your line and connect you back as the audio is breaking right now.
All right.
Thank you, sir. Ladies and gentlemen, the line for the management has been reconnected. Over to you, sir. Mr. Ravi, can you please go ahead with your question now? Mr. Rajesh Kumar Ravi?
Hello, am I audible now?
Yes, sir. Please continue.
Yeah. Sir, what are the cost levers you're looking at in FY25 in terms of fuel and other efficiencies versus FY24?
So one of the major, cost driver for us would be improving TSR. So as I said that last quarter our TSR was 11.27%, and FY23 it was 4.11.
Oh.
Take it, and last quarter was 7.01. So I think this is going to be one of our major lever for improving efficiency one. Second, we are also working on further improving our renewable energy proportion. As I said that, quarter 4 we were at 47% of renewable energy.
Right.
We are planning to enhance our capacity on solar. So we are working on that, another 7 megawatt at Sirui. Then I think we are working at other locations also. That is still under planning. So maybe next time I'll tell you. So solar is another area where we are going to work. Our this AFR facility at Udaipur also will get commissioned during September. So we have not yet commissioned, so that will also get commissioned. So this is going to be TSR, and renewable energy is going to be a major driver as far as cost goes. Apart from that, all those cost levers, because we are heavily working on digital and technology. How we are going to really improve our efficiencies across plant operations, that is what we are working on. We are working with some organizations also to really come out with some kind of digital solutions. So these are the major activity as far as cost goes.
First question, this TSR at more than 11%, sir, how is the costing per kilocal versus your normal fuel cost? Because blended you are close to 1.7, 1.8. So increasing the TSR, how is that helping in terms of costing also, sir? I understand it is helping your green mix for sure.
The cost of AFR is about 1.2 now. That varies across locations. It is little on higher side, and in north part of it is on lower side. On an average, you can take about 1.5, 1.2. Whereas if you take conventional fuel, then it's about 1.8 plus, because blended is about 1.68.
The saving for every one. Okay.
The saving we are getting.
And lastly, what was the trade
I
share?
think also we are a very responsible corporate, and we have committed to be carbon neutral by 2047. So in a way, this is also going to help us to reduce our carbon footprint. So over and above, cost efficiency is also kind of renders our responsibility towards our commitment to mitigate carbon footprint.
And sir, how has been the trade and blended share in Q4?
Yes, so trade was 56% and blended 66%.
56 and 66, okay.
Yes.
Okay. Great, sir. I'll come back in queue. Thank you. All the best.
Thank you.
Thank you.
Thank you, sir. Participants, you may please press star and then 1 to ask questions. The next question is from the line of Mangesh Bharang from Centrum Broking. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. And congrats on good set of numbers. Sir, my question is related to the volume. So we have had flattish volumes at consolidated level, and we have commissioned our Udaipur clinkerization unit in October. So just wanted to understand, is there any, have we done any clinker sales from that plant, or what kind of contribution or utilization that plant would have had in this quarter at the consolidated level?
Yeah, so yes, since we commissioned our grinding station during end of March 2024, and we commissioned our clinkerization unit in October, so yes, we had some excess clinker with us, which we sold in the market, right? So capacity utilization at UCWL, what is it? Yes, I'll just let you know.
Sure.
Clinker as well as cement. Cement, I think anyway, I think it was not there. 80% is cement.
Okay, okay.
Cement was 90%, last quarter. Last quarter 90% and clinker line 2. Just hold on, we'll just let you know.
Sure. So basically the next question was, have we capitalized any costs related to UCW in this quarter?
Sorry, I think come again, I just missed your question.
Have we capitalized any costs related to UCW in this quarter?
So capitalization was only up to the period of implementation. Other than that, there is no capitalization.
Okay, great. And so secondly, so we have seen substantial improvement in our costs over the past couple of years. So I just wanted a couple of, the actual operating parameters, like what is the change in the specific heat consumption of the kiln, as well as the electricity consumption per, say, ton of cement. So how has these parameters changed over the last 2 years? And definitely, with the new kiln coming up, there should be an improvement. So what kind of numbers we are expecting on that side?
Okay, so our cost last quarter consolidated level, if you look at, $5.3. So our power cost was 5.3, and of course, the per kilocal cost was 1.68, right? And
so electricity consumption, not in terms of rupees, in terms of the units per ton of production, units required. So around 73, 74, how it is?
Yeah. 69 units power per ton of cement.
Okay, great, sir. Okay, sir, I'll come back in this form. Thank you.
Thank you.
You may please press star and then 1 to ask questions. The next question is from the line of Prateek Kumar from Jefferies. Please go ahead.
Hello. Yeah, good afternoon, sir. Congrats for good results. My first question is on you talked about CapEx, but just can you repeat your CapEx numbers expected for FY25-26? Total CapEx numbers, including project, working cap, project or other maintenance CapEx.
Yeah, you want for the next year, no?
For FY25 and FY26.
Yeah. FY26, FY25 rather, including the Durg expansion, we would do close to about 1,200 crores. Which will include about 600 crores on Durg expansion and including the normal capex of about 50 crores. And FY26 would be another 1,000 crores.
Okay, you said 1,800 crore in between earlier in the call.
Sorry?
Is that number? Earlier in the call, you said 1,800 crore capex for FY25.
That was only for Northeast. That is separate. That is over 3-4 years. You are talking financial year wise, no?
Okay. That was for Northeast capex. Okay.
That was 1,800 is for the Northeast, which includes 1,500 for the project and 300. That is only for Northeast. And that this 1,200 crores which I am talking is only in JK Lakshmi. That is another company.
Right. Okay. And in the opening remarks, we highlighted some reasons for volume growth being slower. Can you highlight those again? It was not very clear.
Volume, I said that if you look at consolidated level on FY24, we grew by about 5%, right? If you look at quarter basis, then we are almost flat. Now the reason which I mentioned was that we have reduced our sales from some outsourced unit, and I'll just tell you little in detail. We had one an outsourced grinding station in Punjab, so that was taken over by some other players. So we had to stop selling from that grinding station. We also reduced our volume substantially from Amethi outsourced plant because the kind of margin of profitability we wanted, I think that was not coming. So that was second. and there were other, some, sources where our volume offtake was low, and that was a deliberate one. So that was one reason why volume is low. Second, I think all of you should understand, if you look at, quarter 4, only JK Lakshmi Cement standalone, our utilization was 89%. And if you look at, 65-35 kind of ratio, 66-34 blended versus OPC. So this is the optimal what we could have sold, right? So I think we have utilized our full capacity given the product mix which we have, right? And if you look at, overall basis also, our capacity utilization was 81%, which is above industry average. And again, I will go back to that, rationale that our, looking at the product mix which we have, that is what we could have done, and that also includes that, July-September month, which is cyclically low in demand, right? So that is why our volume was on lower side. In fact, in quarter 4, we were lacking, volume. We did not have volume to kind of, sell, right? Demand was there. If you look at, Udaipur utilized 90% of capacity. JK Lakshmi 89%. So I think this is what I think best you could have done.
Sure, okay. And what would be your FY24 year-end capacity is 16.5 million ton, as I guess, 14 earlier and 2.5 was commissioned, consolidated capacity. What would be year-end capacity of FY25, 26, and 25, 26?
24, 25, you're asking, right?
Yes, FY25 and then FY26.
Yeah, so I think we have taken ramp-up plan. Based on that, we'll definitely achieve on an overall basis, console basis 70%, and then next year on 80%. That is what we have said. Because 70% includes that 2.5% million additional capacity which we have already put up, and 1.35 also which will come during last quarter of this financial year.
Sure. And in FY26, 2.4 million ton capacity will come at East locations.
So FY26, I think we'll have full 1.35 million ton from Surat, and we'll have, of course, I think good capacity utilization of Udaipur also. Udaipur line 2, 2.5 million ton.
Sure, sir. I'll get back to the queue. Thank you.
Yeah, any clarification you can say. So overall basis, you just remember two figures, 70% and 80%. This is what we have done.
Thank you. You may please press star and 1 to ask questions. The next question is from the line of Praveen from Anandam Enterprises. Please go ahead.
Yes, thank you for the opportunity, ma'am. My first question is, what is the current status of conveyor belt at Durg and when it will be completed?
So conveyor belt, the status is, as you know, that this pipe conveyor belt passes through a stretch of land which belongs to Steel Authority of India Limited, Bhilai Steel Plant. We are pursuing this matter with them, and that is on the final stages of approval. So we can get this approval in, the next maybe a month or so. Once that approval is in place, we'll start working on that. But in parallel, we have already started kind of, getting ourselves ready. Once we have this approval in our hand, we'll just right away start working on that. So I think maybe a month or two we need to wait for approval, and then maybe another 6 months will take to, put this online.
Okay, sir. Sir, my second question is, what is the current capacity utilization of Udaipur Cement's new greenfield plant of 2.5 million ton?
So, current, I think we have just started in maybe in April, I think, let's say. So it's about 40% around.
Okay, sir. Sir, my third and last question is, how much sale you have reported from contract manufacturing sale, and where do you report it in this sale?
So we have not included any. That volume we have not included, right?
Sorry, sir, can't hear you properly.
Outsource unit volume is not part of the volume which we have reported.
Okay, sir. Thank you, sir. That's all from my side, sir. Thank you.
Thank you. You may press star and one to ask questions. The next question is from the line of Uttam Kumar Srimal from Axis Securities Limited. Please go ahead.
Yes, sir. Good afternoon, sir, and congratulations on good set of numbers. My question pertains to sir, pricing. How is the current pricing in the region where we are operating in west, east, and north? Further, second question is on power and fuel. You said our KCL cost is 1.68. So, any further reduction we are expecting in ongoing going quarter?
Yeah. So, first question first. So, you asked about
pricing, sir.
On prices, right? So, I'll take you a little back. If you look at, quarter four, prices went down by about, close to 5% with respect to the preceding quarter, right? And if you look at, whole year prices, the kind of, data we have with us, price has dropped by about 1.5% if you compare that with FY23. Okay. So prices have gone down, and I think all industry players, they have worked on, kind of taking advantage of softening, fuel costs, and then kind of, other efficiencies which, we have been driving in our organization, right? So price trend has not yet reversed. The kind of, trend which was prevailing in the quarter four of this last year, that still persists. And that is because of the fact that we are through this, national election. Once that election is over and results are out on 4th of June, demand will improve. So demand is on lower side. One, that is triggering, not a very good movement in price trend upwardly. In fact, prices are either going down or prices stable in some of the market. So price-wise, I think things are, I would say, as it was there in quarter four. Demand is on lower side. That is what the state of the affairs today. But I see that once elections are over, quarter two is going to be little better than quarter two of last year. And once demand improves, then prices also will inch up. This is what I believe, because that is a good, dynamics of, demand and price. Since demand is low, prices are kind of under pressure. Once demand improves a bit, definitely prices also will go up a bit.
Okay. Sir, with regard to power and fuel, so any further decline we are expecting in terms of KCL cost?
No, I don't think so, because if you look at, international prices of petcoke and imported coal, that is in fact, going little bit upward. And from the fact that we do have, some supply chain issue because of the conflict, geopolitical situation which is there, right? So I don't think that, that is going to go down further. Maybe this is going to be range bound. It will go little bit up maybe, or be maybe stable. That is what I see. But definitely is not going to go down from here.
Volume growth we are expecting this year, FY25?
So, as I said, we have planned along with, additional 2.5 plus 1.35, close to 4 million ton additional capacity. Our plan is to achieve 70% utilization, and that translates into about, close to 10% plus of volume growth. That is what we are targeting. That exclude all outsourced unit and everything.
Sir, this is on consolidated basis. On standalone basis, sir? If you can elaborate on that.
Very difficult, because see, last quarter also, if you see Udaipur Cement Works Limited, we have grown by 33% in terms of volume growth. And in case of JKLC, it is, maybe negative. So I think better to look at, at console level. That would give you a better picture.
Okay. Okay, sir. That's all from my side, and all the best to you.
Thank you. You may press star and one to ask questions. The next question is from the line of Tushar, an individual investor. Please go ahead.
Thank you for the opportunity. My first question is, just want to confirm the timeline of your new Surat grinding unit. You mentioned in your commentary last quarter of FY25.
So Surat, we are commissioning this 1.35 in two phases. First phase we are going to commission in the month of October, which is going to be 1.35 divided by 2 kind of thing, around 0.7 million ton, right? And the next phase will be, doing around, last quarter or maybe March, April of FY26.
March, April of FY26.
Yes, yes.
Okay.
Because first we'll kind of do this, grinding, and then we have, pre-grinder plan also, which we'll be doing around, quarter 1 or quarter 4 of this year.
Okay, sir. And second question is, what are the savings possible from railway sliding that will get commissioned in September 2024?
So, saving, I think, is very difficult to really pinpoint. So, I think you need to understand. This is going to help us to be more competitive in markets of Odisha, because now, till now, we have been supplying clinker by road, which was costly. So now it will go by rail. So I think that advantage we'll get. We have not also been able to reach out to some of the market where we wanted to be, which is, better in terms of pricing, and also the distribution cost is lower. And particularly I'm talking of, eastern part of MP and some part of, eastern market like Bihar and Jharkhand, right? And incoming which we take like, coal and gypsum, there also we are going to get advantage. So, we are going to have, a good access to the market, one. We'll fetch, better price, second. But if you really want to know the, kind of, cost or distribution cost reduction, then it's going to be on account of the incoming which we bring in and the outgoing which we take to some of the market. So maybe, I think we have not yet kind of clearly quantified it, but I can tell you that how much benefit we'll get out of it.
Okay, sir. And just a last question, can you provide any timeline for expansion at Organic Cement?
Sorry, come again?
Timeline for expansion at Organic Cement that we have recently acquired.
Agrani. Okay.
We are working on this external clearances. Once that is in place, will take 2 years from thereafter. So environmental clearance and after the land acquisition. Once those are in place, 2 years after that. So maybe it takes about a year, 8-9 months for those things. So if that get completed by say April of 20, March, April of 25, then 2 years thereafter. So maybe March, April of 27.
Okay, sir. Thank you. That's all.
Thanks.
Thank you. Ladies and gentlemen, this will be the final reminder for questions, and no further reminders will be given. That you may please press star and 1 to ask questions. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you, sir, and congratulations on the good profitability, 1,000 rupees EBITDA per ton, second quarter in a row. Sir, just still need a clarity in terms of the capex absolute at console level. So if you help me, you have mentioned 1,200 crore for FY25 and 1,000 crores for FY26. Sir, total capex for Durg is 2,500 crore. Northeast is 1,800 crore plus railway siding plus WHRS solar. So what is total that total cost out of that? How much we have already spent and how much to be spent in FY25-26? Because it seems the number is on the lower side. Because last time we said 4,000 plus kind of a capex, and that too in the Q4 we were looking at a much higher capex. Total FY24 we are looking at 1,500 crore, but we have done 1,000 crore. So will it also spill over in FY25? And based on this, how do now look at the net debt number for FY25, 25-26, and maybe possible the peak net debt?
As far as capex is concerned, we are talking of about 1,200 crores in FY25. That is only and only in JK Lakshmi. Another 1,000 crores thereafter and 1,200 crores in FY27. So 1,200 plus 1,000, 2,200 plus another 1,200. That is as far as JK Lakshmi is concerned. Then coming to UCWL, they have about 300 crores remnant capex for the expansion, which will come in FY25. Thereafter, for next 2 years, other than a maintenance capex of maybe about 15-20 crores, there will not be much. Third, on the Northeast project, one is the acquisition cost, which we are talking of 125 already paid in FY24, another 200 gets paid in FY25. And thereafter we have the expansion. Then it will be about 350 crores and then another 1200 crores thereafter. In FY26 and 27, that is about 1500 crores. So those are broadly. So in line with these capex, our debt would be maybe, we are talking of a debt equity of 2:1 overall for the project. So we'll have contract additional debt to that extent. As of now, we are talking, when we see our debt position as far as JK Lakshmi is concerned, it's almost negligible. And going forward, based on these capex, it will be there. We are talking of a gross debt on a standalone basis for JK Lakshmi as of March 24, about 700 crores, cash of 500, so net debt of 200 for JK Lakshmi. On a console basis, we have 2,000 crores of debt, 650 crores of cash, and 1,400 crores of about net debt. So we don't, it will certainly, I will not say it will not increase, it will certainly increase based on these capex which we'll have on hand, but it will be within the norm what we had set for ourselves.
True, sir. But still, just wanted to understand. So broadly, and in terms of the railway siding, WHRS or the solar, so what would be the additional capex and what would be the capex for the maintenance? What we have right now, you mentioned, is only the expansion one.
Around 1,200 crores. That includes, when I talked of JK Lakshmi, it includes partly for expansion, partly for all that. I have not given project-wise breakup. So when I say 1,200 crores, it includes expansion, railway siding, Surat grinding, everything. Right?
Oh, okay, got it. So broadly, is it fair? We can have a kind of a 4,000 crore kind of a net debt peak, maybe in FY26 or 27, because the overall capex would be on the higher side versus the free cash flow or the cash flow from operations for next 3 years.
Yeah, net debt will certainly increase because of the capexes of 4,000 odd crores. So obviously, it will go up.
Okay. Second, in terms of the, just to clarify the timeline, the first phase for Durg, which will be a 1.2 MTPA grinding. So clinker is definitely there, 1.2 grinding at Durg and 1.2 grinding at Prayagraj, which will be commissioned by FY26.
Yeah, last quarter.
Oh.
FY20.
Okay. Got it. Second, sir, you mentioned in terms of the TSR and then the AFR and increasing this. So broadly, how much more from this quarter, how much more we can see in terms of the cost savings? Is it possible on a per ton basis? How much more we can? Definitely, we have done much better in terms of the cost reduction. So just trying to understand how much more we can do.
So, Shravan, I think I told you that our TSR is going to be more than 12% this year, which was 7% last year, right? So to that
extent, this is console number you are saying?
No, this is, I am talking of JKLC, right?
And, sir, I want a console level.
So console level also, right now we do not have any TSR at Udaipur because we do not have that facility, right? So Udaipur will go to a level of about 7-8%, and JKLC will be there at about 12%. And if you take average of this, then it will be around 10% around.
Okay.
From right now, let's say, average is about 6 to 10%. So 4% increase in the year FY25.
Okay, got it. And then in terms of the broadly the current prices, if for us as a console level, if I have to look at, is it fair that 1.5-2% would be lower versus the fourth quarter average in cement prices for us?
Yes, prices have gone down in quarter one of FY25, right? And it should be about, let's say, 1% around. 1 to 1.5%.
Okay. Got it, sir. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, we will take the last question for today, which is from the line of Rajesh Kumar Ravi from HDFC Securities. Please go ahead.
Yeah, hello.
Yes, sir, please.
Yeah. Hi, sir. Could you share on the console what was the clinker production in FY24 and also how much is the clinker purchase and clinker sold in FY24 consolidated?
Yes, just hold on for a sec.
Sure, sir. And also Udaipur volumes in Q4, total sales volume.
Yes. Udaipur sales volume I can give you right away.
So whole year you want?
Yeah, Q4 and whole year Udaipur.
Udaipur whole Q4 it was 7.56, which included cement of 6.42 and 1.14 of clinker. And for the whole year it was 24.92, which included cement of 20.97 and 3.95 of clinker.
Okay. And JK Lakshmi consolidated clinker production?
That we have given in our this thing, no?
No, cement.
Our press release.
Full year, sir, total clinker production.
We have given. 69, yeah.
69, 70 like almost. Clinker production for JK Lakshmi Cement in quarter 4 is 69.96 lakh tons.
69.96 lakh tons. This is quarter 4.
Yeah. No, this is for whole of the year.
Whole of the year.
No, this is standalone, right?
Yeah, this is for standalone.
And Udaipur is how much clinker production?
Udaipur quarter 4 was 5.91 lakh tons. For whole of the year is 19.75 lakh.
19.75.
Yes.
And sir, how much is the clinker sales on a console basis and how much is clinker purchase?
On console basis, the clinker sale was 2.32 lakh ton in quarter 4, and for whole of the year it was 8.7 lakh ton.
8.7 lakh tons. And also, how much is clinker purchase at different places?
There is no clinker purchase.
Clinker we have not purchased.
Not purchased, okay. And so, what would be your CC ratio in FY24, cement to clinker production ratio?
It could be about 1.6.
It is about 1.46.
1.46, okay. So this is also marginally improved versus FY23, which was around 1.43, 1.44. So what is the outlook, sir? You're looking at increasing this blending ratio more and more, and to what level you're looking at? Obviously, before the East, you will be targeting higher because in East you're setting up higher grinding unit, almost 2x clinker. But purely from the Udaipur ramp up and all, are you looking at this cement to clinker ratio going up north of 1.5x in FY25 or in FY26?
So definitely, I think we are trying to reach to close to 1.5 level.
Okay.
Right. Because definitely endeavor is there to reach that level.
Sure. And sir, last question on the capex which you enumerated in detail. It seems you will be spending 1,700 crore this year, 1,400 crore on a console basis next year. And you mentioned that the Northeast project, 1,200 crore you are targeting for FY27 alone, or it could again get FY27 and FY28?
Sorry?
The Northeast project, you mentioned that you would be spending 200 crore this year as a balance payment for the acquisition. And then FY26-27, you mentioned 350 crore and 1200 crore, right?
Around that. Some portion that may be incurred this year as well, especially on the land acquisition.
Okay, so this 200 crore plus some. So this year capex could be higher than 1700 crore console.
Project cost is 1500 crores. The part may get spent in the current year and balance in the next 2 years.
Okay. Okay. Great, sir. Yeah. Thank you so much. All the best, sir.
Thank you.
Thank you.
Thank you. As that was the last question for today, I would now like to hand the conference over to Mr. Vaibhav Agarwal for closing comments. Over to you, sir.
Yeah, thank you. On behalf of Phillip Capital India Private Limited, we'd like to thank the management of JK Lakshmi Cement for the call, and many thanks to Part for joining the call. Thank you very much, sir. Michelle, I'm now going to conclude the call. Thank you so much.
Thank you, Mr. Weber, and thank you for all the participants. Thank you.
Thank you, sir. Thank you, members of the management. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.